Hey guys, it's Mark Lane. Today we're going to be talking about hard money lenders and how to know what they're going to lend as far as a loan to value. Now, I have a lot of people that send me questions and comments about that the hard money lenders requiring too much money down, or their terms don't work and stuff. So I kind of want to discuss that topic. Now, first, the most important thing to understand is that every hard money lender is, an individual or running their own business. So they don't have to fit into a category of, here's what I lend, here's my terms, right? They make their own rules because they are their own person, their own business. So therefore we have to, sometimes it makes sense to have multiple hard money lenders so that we have different variables or different options, okay? Some have different terms as far as how the payment's made. Sometimes that can be negotiable. So I kind of want to make that point first, that it's not a one-size-fits-all type of funding or type of program or whatever, okay? There's variables in it. And most importantly, those variables depend on the person lending. Now, the loan to value can change as well. And the reason I'm kind of digressing because I'm thinking about what I pay and what I've gone through over the years, how that has changed. A hard money lender's charges loan to value normally based on their comfort in the deal. Okay, they're normally going to want to be into the deal no more than what they can turn around and wholesale that deal for if they have to. Okay, they don't want to be stuck in the transaction. So if for example you failed on the deal and you had to bail and you couldn't finish it, they want to be in a position with it to where that they know they can make money. So that's their number one concern, is they want to make sure they are in a risk-free investment. All right. Now, the loan to value can change dramatically. Some hard money lenders will fund 100% of the transaction, all the way up to 75 to 80% of the value of the home, or the expected value once you sell it. Okay, so in that aspect, if you plan to sell the house for $100,000, they will lend purchase price and rehab costs all the way up to $80,000, or maybe they'll go up to 70%, which would be $70,000. Others will say that they will lend up to 65%. So that might be, they will lend, let's say if you pick the house up for $50,000, they'll lend your full purchase price, and then they'll lend additional 15% for your rehab costs. Okay. Others will say that they'll lend just the purchase price, and they'll lend 50%, and then you're responsible for coming up with the additional rehab costs. Okay. So my point with all this is there's lots of variables in there. There's, like I said, there's not a one size fits all. So your objective is to be going out and to build multiple relationships with multiple hard money lenders. But don't be afraid. Once you start to get the credibility built up, and once you start to get the relationships built up, then at that point it might make sense to start negotiating a little bit, or at least ask for, the terms can be the same, but you might ask for the payment schedule to be a little bit different. So I'll give you an example. So when I started out, I was paying 5 points and 12% interest. Okay, the 5 points, it was rolled into the loan, so I wasn't paying that out of pocket. But my lender was only comfortable providing for the purchase price. Okay, so I had to come up with all the rest for the rehab costs, and I would usually have to find that in the form of, a friend, a partner, private money, whatever, any way that I could pull that money into the deal. And then on top of that, my hard money lender required that the payment came out of my account through ACH Withdrawal automatically. for that 1%, right? Because I'm paying 5 points, which is rolled into the loan, and then I'm paying the 12% annually. Well, that 12% was broken down into 1% per month that then is coming out of my account automatically each month. Well, it's not a big deal when we're doing a deal at a time, but eventually got to where I was doing, 6 deals at a time, and you will too. Well, that starts to be a pretty big chunk coming out of our account every single month when we're trying to pay contractors and pay suppliers and vendors and everything else. So, I didn't want that $5,000 or $6,000 coming out of my account every single month. It kind of got to the point where I never felt like I was making money. So I finally went to them and said, listen, I really appreciate your funding. I appreciate you being able to help me in this business. But the one thing that's making it hard is these automatic payments every single month or having to make these interest payments. I said, can we keep the terms exactly the same, but instead, can I pay everything back on the backside of the loan once I sell the house? Keep in mind, this happened once I built the relationship with them. I didn't ask for this right off the bat, but they were able to say yes. And so now, and this has been for a couple of years now, I don't have any payments going out monthly. All those payments come out, all those payments are added up, and then it's just one lump sum that's paid once I sell the house. So it means I get basically 100% financing, and I don't have any payments going out the door. Now, I'm not saying that you can do that right off the bat, but I'm saying that's something to shoot for, because that makes it a lot easier, makes doing business a lot easier when you're not writing checks out every month or making those automatic payments. So like I said, just to kind of recap, when it comes to hard money lenders, they are all different. They're all running their own individual business, and you have to find out from each one how they work and what they're looking for as far as points, interest, and payment schedule, as well as how they lend or how they figure what they'll lend based off of the loan to value or the price of the home. Okay, because once you can establish that, then if you need to go out and find additional funding, if you need to bring in partners, or what you need to do. So the name of the game is really to build those relationships and to figure out what else you need, what other resources do you need to put this deal together. All right. If you haven't, please be sure to like this video. Please be sure to comment. Let me know what else I can do to help you in your business. And if you haven't already, be sure to subscribe to my page so that you can see new releases when they come out several times a week. All right. See you in the next video.